Welcome back to another episode of Hoot and Poop. So in today's video, I have decided, after a few months of creating a video, I decided to show and let you guys know who I am. So that because I feel that there is always this connection between who I am and versus the content that I bring out for you guys. So I thought it would be much more sincere for me to show you guys who I am, so that at least we can have more interactions moving forward. So I still appreciate a like and subscribe to my channel, so that at least you can reach out to more people. My intention was solely to share my knowledge and to help others. Okay, so today's video is more a little bit, there'll be two parts of it. Okay, the first part is more of to discuss with you guys, on the general market sensing that you guys are having. I understand that the stock market actually has been plunging. In fact, for growth stocks, they have been dropping since November. And in fact, until yesterday, or rather today, it's still dropping even lower for some of the stocks. When will it stop? I do not know. But so then the question is that, what do you do, or what should we do? So I understand that among the audiences, some of you will feel fearful. Right, and some of you will definitely probably feel happy or neutral about it. Now, regardless of what kind of emotions you guys are having, okay, of course it'll be good if you guys are happy, because at least you guys can buy the stocks at a cheaper price. Okay, but for those, especially for those who are much more fearful, I think there's something that you guys need to think about, is that why are you guys fearful? Are you guys fearful because of the fall in share prices, and then you fear that this is not going to end, you are losing money, or are you fearful because you're on leverage? So I think this is something that as investors we have to be very mindful about. We have to be very honest with ourselves. Personally, for me, I definitely, it's not a day where I can rejoice and be happy about and stuff. I'm still human. I still have my own emotions and stuff. But I do feel a little bit, I wouldn't say I'm fearful or what, but I just felt really very numb over this whole thing, because whether or not it goes up, goes down, I really wouldn't know. So to me, it's more like my game plan is more like, I have funds that have already been, I have my remaining money, which I have already divided, and will last me all the way until maybe February. And if the share price continues to drop, I will just slowly slowly buy in on those companies that I'm looking at. And of course, if I'm out of money, okay, then so be it. That's it. I mean, you can't really do much, and always trust the whole process. Now, when I say that, it's because if you refer back to all my past few videos, for example, I talk about the game within the game. Choose the stocks that you are best at, within your circle of competence. So for those companies that you have already researched upon, okay, already have conviction in it, and if the company is still doing well, for example, if the revenues are still growing, if let's say there are more customers are still using it, and if you think about it in the long run, this business is still going to be around, then so be it. You just let market do its work, and that's it. Just focus on the long-term procedure. So this is a really short so-called mindset that I would like to inform you guys, so that I hope that this can help you to feel calm. I have not done any how do I put it? I have not done any forced sell. I have not sold any of my shares because out of fear. I did rotate some of my shares because I felt that the growth may not be as remarkable compared to other stocks that have already, other companies that have the price has dropped now to a very comfortable level. Other than that, I didn't really do much activities except just to buy my existing shares, and that's how I deem investing to be. So I hope this helps you in terms of making you guys calmer, and so that at least you guys don't do any panic sell, because the last thing you want is to have panic sell and incur a permanent loss. Okay, so that's the end of the first part of the video, and now I'm going back to the second part of my video. So let me just shift the screen away. Moving back to the second part of the video, I'll be showing you guys the latest update on this company called iFast, which I've also covered it in my previous video. Okay, so on the news that was released on the 7th of January, iFast, they have rather acquired, all right, the full license of a UK bank. Okay, and by acquiring this UK bank, which is BFC Bank Limited, okay, iFast have added a digital bank capabilities to their ecosystem. So you can see from this chart below, prior to this acquisition, right, iFast, basically we only have this area here, but with acquiring of the bank in UK, okay, iFast have added this digital banking capability to their ecosystem. Okay, and of course in this, all these announcements, I will also place it in the description below, so that you guys can take a look and read through them in details. Okay, so first, when we talk about acquisition, right, when we look at this kind of company acquisition, we must then ask ourselves, what's the purpose behind it, what's the perks behind it, how much do they pay for, etc. So take a look at this one. So based on this, okay, we can see that the gross revenue of the bank is about £8 million, net revenue about £7 million, the net asset value is about £17.8 million, and of course, iFast, basically the whole investment, the acquisition, as well as the further injections of funds amounts to £40 million. So I will just take 40 million. So basically, if you look at it, right, the whole thing, that's how much they pay. So basically, iFast paid about 40 million pounds to acquire the bank. And also, iFast also did mention that this whole deal, okay, the price to book multiple is about 1.62 times. Now, why do we use price to book? Because usually when we use price to book is when the company is asset heavy. So like a bank is asset heavy because they are holding all the cash, right, from for the people. So generally, this is why we use price to book for iFast, rather for banks. So if you talk about the price to book multiple, it's about 1.62. I agree with iFast that this is actually at a very attractive level. If you pay, of course, if you pay at fair value, like price to book equals is about 1. It should be 1 time. But no matter what, when you purchase something, there will always be some. You always purchase it higher, slightly higher, or way higher than the book value of the company, of the asset. So 1.62, I think it's really quite reasonable. Rather to the point of, I think it's quite attractive. Now, I also want to bring you to the slides, which is much more easier for us to go through. Okay, I'll leave the details reading details to you guys, but I just want to go through the few pointers and also my thoughts about it. So, iFast, okay, they have added in the digital bank arm through this acquisition. Okay, and my own personal take is that, okay, I think that this acquiring this bank in UK, it gives iFast an instant jump in terms of having a digital banking capability. Okay, and with that capability, through this acquisition, iFast will then be able to learn how the whole system works from a existing procedure. So by learning how this system works, iFast can then use such knowledge into their current 5 markets that they are located in. For example, Malaysia, they have submit in a bid, for their digital banking. So if you think about it, once iFast gets the knowledge of how to run a digital banking, what's the things that needs to look out for, they can apply that to the Malaysia contract if ever they have won it. And for Singapore, even though they have lost out, but if let's say in the future, if Singapore wishes to roll out more candidates for their digital banking procedure, iFast can also participate in it as well, and this helps to build iFast credibility, because you think about it, iFast now, they have a digital bank through their acquisition, they can learn from it, and they have it. So it's not like they start from scratch in some ways. From you look at from a credibility point of view. Okay, I personally don't think that they are going to move into the UK market. I feel that this acquisition, it's more for the digital bank system, the digital bank software, to build their own expertise in this area for iFast. So this is generally my view on this thing. Personally, I'm quite positive of this whole news, because at least this goes in line with what iFast want in the future, which is to introduce the digital banking into their system. So that's my take of it. It's not a recommendation to buy or sell. Basically, I'm just here to just share the latest news and to just share my view, so that you guys can look at it, look at the information better whenever there's such news that comes about. Okay, so I hope you enjoy this video, and I'll see you in my next video. Invest safe.